Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's keep up with the euro currency. So this week I have a lot of things to say concerning the current fundamental situation, and it would be better if you will read this, because a lot of interesting and important stuff stands in the fundamental part today, and well, it will be too boring and difficult to hear us, too long to talk about this in just daily update. So in two words speaking, on Friday actually has happened the things that we have said. If numbers will be poor, be prepared for reversal. And that has happened, but at the same time, we should understand, and this is actually the normal thing, when the market just is stepping in the process of the tectonic shifts in the global economy, you just can't get the straightforward positive numbers straight on, and you in the first stage you are getting the mixed numbers. So it will be a bit volatile and not really absolutely evident. And that actually what we have currently. It's 2 weeks, in the previous couple of data, we've got strong inflation, good numbers on the performance. This time on the non-farm payrolls we have a bit worse numbers. But it doesn't mean that our theory and suggestion now is not valid anymore. I would say it's quite versa. That's indeed the overall things that we're talking about standing in progress. Because outside of these numbers, just on the payrolls, you could see other important events that stand on the market and in the world that suggests and confirms well, our thoughts. At least currently, I do not see any reasons to deny the hypothesis that we have put in the consideration approximately the month ago, that closer to the end of the spring, situation could turn drastically on the forex market. Well, all the stuff we discussed in today's weekly fundamental report. We are talking about the dollar smile. Those of you who are long-term with us, and if you read my course on the forex market, there is a chapter dedicated to the dollar index. And when I have written this course, actually, this was the moment when the dollar smile just is ready to start. And we put the forecast, and you'll see this in our forex course that I have written. There is the chart of the dollar index and quarterly chart, and we suggest it will be smile. And precisely in 2011, this smile has started. Now we're coming to the next smile. This is one topic. Also, we're talking about in the fundamental report on extreme bearish positions globally against the dollar. That could be very important for a turning moment. European statistics much worse than United States as a stock market, as a vaccination. So currently we estimate that's approximately Europe will get 1 year lag to the United States on recovery, and actually European Union could meet the double bottom recession compared to the United States. So all this stuff makes us think that we are correct on the fundamental view, and that dollar should become stronger on a long-term perspective. Meantime, in the shorter term, we have the trading plan for the week. And in the beginning of the week, we intend to ride on the momentum that we've got on the non-farm payrolls list. Actually, guys, on the daily chart, you could see a great bullish engulfing pattern with the reversal candle on the board. So market has created the new low, but close above the top of the previous day. That's reversal session. Both patterns suggest kind of the ABCD shape on the intraday charts and suggest some deeper retracement. We suggest that it should be somewhere to the 121. At least 121. This is first part of our trading plan. Second part will happen when these first ones will be completed. Market hits 121, and there we start to watch how market behaves with the MACD predictor. Once we get the bearish grabber, That could be very important to us by a few moments, technically because our OP target is not reached yet, and that could be the signal that market is coming back to the OP. From the fundamental point of view, since we will get a lot of statistics this week, on common week I mean, this is the CPI, this is retail sales, Fed minutes statement, and other statistics, that could make impact on overall performance. And if markets start dropping here, it just will prove that overall reaction on the non-farm payrolls release was temporal, and it doesn't break the idea of the possible strength of the United States dollar. So that's also the important moment. But first we are starting with this engulfing. On the 4-hour time frame chart, we see that right on the 21 area we have strong confidence resistance. And that's our first destination point that we intend to focus. Potentially, if some rally will continue by some reasons further, it could be a larger head and shoulders, as you can see here, with the greater shape. But first we are watching for just minor pullback, and we'll see what will happen next. So we have the resistance. On the hourly chart, we intend to consider the head and shoulders as well. Smaller scale, so this will be left shoulder, head, right shoulder. So here, as usual, we use the 50% support. Euro currency likes it. It's 120 even. It's potential entry point to the upside. So ABCD target, if you will see it, based on this entry point, shows 121 target. That perfectly agrees with the confidence resistance. So that's our first trading plan for the beginning of the week. Correspondingly, if market will not hold here, start dropping lower, right back down to these lows, it means that probably no head and shoulders will happen, and the patterns that we have on the daily chart could fail. This first moment to keep an eye on. Also, just stay aside from the strong action. So if we'll see just collapse here, right back down to 120, it would be better to not take position immediately and see what will happen. We would like to get something of that sort, really gradual action, maybe shape of the ABCD pattern or something that kind of to the downside. Then we consider taking long position here. Second stage, as I said, we'll step in when market hits 121 and starts to flirting with the MACD predictor. Appearing of the grabber, this will be signal to us that probably we should be ready for downside continuation. At least we'll consider this pattern definitely. So that's approximately what we intend to do on the euro in the next week.